Here we have the 30-minute price chart for Broadcom Incorporated, stock ticker AVGO. Here we can see that the stock kind of finished the week trading a bit sideways, but this was preceded by periods of relatively strong movements to the top side. And I do think that this falls in line with our broader assumptions here that we are looking at another test of higher prices. But there are a couple of signals here that we need to watch to the downside because there are a couple of red flags here that could cause some concern for the bulls. So I think that we should take a look at these here. Currently, as we can see, we are trading above the entire moving average cluster. This is the 30-minute chart. So here we have the yellow line. We have the 20-period EMA. Orange would be 50 period. Purple line would be the 100 period, and the blue line would be the 200 period exponential moving average. So this would be the average of the prior 200 candles trading periods. So overall, that is a bullish signal, but it does look like we're starting to grind through this 20 period EMA a bit. It's not really clear that we're going to be able to sustain this level because we did see a 30-minute close below this level. So that is a bit of a concern. So if we lose the 20, most likely we would probably move through the 50 as well. I would expect if we do see support from there, I would expect it to come in closer to 1650, which is where kind of a resistance turn support level rests, as well as the 100 period exponential moving average. As we can see here, this line here kind of matches up pretty well overall. And it's not an exact movement here, but if we're looking at the price highs from July 1st, we can see that this comes in at roughly 1647.70, so just below 1650, and then we can see that the 100 period EMA comes in just above 1652. So roughly 1650 is where I would refer to this area. Because we do have these two factors kind of working together and likely to generate some support for this stock if we do start to see dips here. Overall, the next level of resistance does come in at the let's get an exact number here. The July 5th highs came in at 1765. So this will be the level to the top side. And then if we do break here, the next target to the upside really is the all-time highs. So we would expect us to see a fairly substantial move higher at that point. That would be a move back above 1850 if that were to occur. But I do think that if we lose both the 20 period EMA and the 50 period EMA, the kind of final line in the sand here is this 1650 level. And then if this does occur to the downside, I would expect to start to see some moves lower. And there are some reasons to believe that this might be the case. Okay, so in particular, we can point to the fact that, the 1765 high really did create a heavily overbought trading condition for AVGO. We were actually massively overbought at that point, where we were approaching the 90 level, which represents the extreme overbought territory. Above 70 is overbought, but above 90 would be extremely overbought. So as we can see, like this is a full, this turns green when it's overbought. And this did create a condition where share prices really did need to reverse a bit, and at least consolidate so that this indicator reading can kind of work itself out. As that happened, we can see that this upward trend in momentum broke to the downside. So overall, this is why it really wouldn't surprise me to lose a couple of these moving averages as far as upcoming support levels are concerned. We're already kind of grinding through this 20 period, and as I said, we did see a half-hour close below that level. So that is a warning signal. And it does suggest that we could be in store for some weakness here before we turn higher once again. So currently, overall, this is still a bullish situation. We haven't really retraced much of this dominant price move. If we're looking at the lows that were generated, this would be the 3rd of June. This would be just above 1300, 1303 roughly. And the highs came in, as I said, just above 1850. So this would be 1851. This price high was generated. This would be June 18th. Would be that trading period. So if we're looking at that as the dominant price move, we can see that we already have retraced half of that move, and we're starting to move higher. So the upside scenario here is completely plausible. I mean, there's really nothing stopping this stock from continuing to move higher and retesting those prior all-time highs, except for this overbought indicator condition. As we can see, we really didn't need to reach price levels that were very high in order to reach territory in the indicator reading that was approaching extremely overbought territory. So that is a bit worrisome because it looks here as though the stock can trade just a little bit higher and pretty quickly become overbought. We're trading in those types of conditions at the moment. So that is a concern because it does suggest that the stock is going to need to see a longer period of either downside correction or at least sideways consolidation. Um, so that this would allow the indicator conditions to kind of work themselves off a bit, and then it would make it much easier for the stock to rally to higher prices without reaching overbought territory. So there are some factors that need to be watched here. Um, as I said, we are creating support zones at higher and higher levels. If we did, for example, if we did lose the 1650 level, I would expect prices to be contained, further downside to be contained to less than $100 in total selling pressure. I would really be looking at the 1565 level as the next level of support. And then this would represent a fairly strong buying opportunity if we were to see this level trade once again. Because from there, the real downside risk would really come in at the 61.8% Fibonacci retracement of this dominant price move, which would come in just above 1500. So roughly 1512, 1510. And then below there, you got the psychological level at 1500. So if you wanted to kind of structure a trade here, maybe with stop losses just below the $1,500 level, I think that would make a lot of sense. So, roughly buying, and entering into a partial position, maybe half of a position or a third of a position at roughly 1650, another half of a position or a third of a position at roughly 1565. And then if you were in thirds, you could buy just before reaching, roughly 1520, something like that, like just before that 1510 level, and then probably stop out the entire trade below 1500. That's the type of trading scenario that would make sense in a context like this. But in order for that to occur, we would need to see prices drift a bit lower, so that this indicator reading can kind of work itself off and allow share prices to move higher in a more forceful manner. So here's the current market analysis for Broadcom Incorporated, stock ticker AVGO.